Hi everyone, and welcome along to our Sunday weekly market update. It's great to have your company for this session. My name is Paul Botchell. I'm the founder of Actions to Wealth, and I'll soon be joined by the Actions to Wealth team. I thought before they came in and got too involved today, I might just do a little look at some market stuff and give you guys some thoughts. It's quite interesting when you teach a lot of people to trade and you can see their accounts, what they're doing. And look, one of the things that's happening in markets is I don't think that you need to be a great market technician to be able to do this part here. This is the Australian dollar, and it's ranging and has been now for a period of time. And, we're going back here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23, 24, 25, 26, 27, 30, 30, 8 weeks. And we're going to need to let it jump out of this range. We don't need to range trade this. We need to let it come out before we trend. It's a little bit different from, say, the euro. And what the euro's done, which is even more frustrating for mine, this is one of the things I really hate when markets do this. Really, it's jumped into a little consolidation period here. And then it's jumped into a little consolidation period here. And then it's jumped into a little consolidation period here. And look, this is just the market that when we can look at this and get into patterns and go, look, we've got a high and a lower high and a lower low, and we should be going short, and maybe if we get a break here, we should. But really what we're seeing the euro do is just go sideways and bounce out and go sideways and bounce out. New Zealand dollar, honestly, in my view, I remember not trading for a month in September 2012, and I don't think I've seen markets like this since. We just need to look. All that means for us is to be patient. So there is the range on the Kiwi. So again here, probably talking, December 2020. Had a little pop out, failed, a little pop down that failed. But really, this is where we are. And look, there's some chart patterns we can talk about. If you go back and watch the videos, we talk a lot about these ranges and how they're set up with the decisive bar, the extended decisive bar, and then move back into the middle, which then sets up the next range. Decisive extended bar, comes back into the middle, sets up the next range. And it's the pattern we're getting at the moment. And this is just a time for patience. And if you're a forex trader, different with other stuff. But boy, I think dollar CAD might have bottomed. I think we might be about to see something here. We may see a breakout here and a retest of the chance to get trend trading again. And all we have to do is be patient and wait. And if we do that, markets will come back to us, like markets always come back to us. But really, that's just a bit of a brief overview from me as we look at what a number of clients are doing. What I really want to do is get the experts in to see if they can shed some real light on this and help you guys to make a few extra dollars. First expert today is Julian McCree. Julian, come in to talk macro markets, and thanks, Julian. Just come straight out of your hour-long session with the Actions to Wealth clients, doing a Q&A in there. Amazing, great session. I listened to about the last 45 minutes of that. I thought it was brilliant, mate. Thank you for that. What are you going to talk about markets today?
Well, first off, leave that chart up. So the reason why I want to leave that chart up is this, finally, the break in the Canadian dollar that we've been looking for. Paul, go back on that chart a little bit further, right?
So you could actually pull that range down to there, couldn't you, and suggest that we're out of the most recent range.
Absolutely.
Top there. We actually do have a breakdown. Now, there are these areas here. I'm going to go back because I've just got to get, Zoom, Julian. I've just got to get some images of people out of the way. Just go away there. And I'll go back and I'll just bring some more data in for you. How much data would you like?
Just keep going back till the Australian dollar actually doesn't go down.
Dollar CAD, you mean?
Sorry, dollar CAD, doesn't go down, right? So you just keep going with this, right?
Look, it's one of the dollar CAD is just a brilliant trend trading pair, isn't it? This has been, honestly, I don't know how I did that or how to undo it, but I'll see if I can undo it for you now. That was, I do many things on MT4 I don't know how to undo. There we go. So
that's good enough, Paul. Guys, look at that crazy chart, right? And I think what's really interesting about this is there's been a few fits and starts on the Canadian dollar. I always had in my head that was going to get down to about 118. On the monthly chart, there's a major support, I believe, down at about 118. But look, maybe we're not going to make it. Two things are going to happen here, right? As always, I love it when markets break out because there's only two possible outcomes from here. Yeah, there. right? There's only two possible outcomes from this, right? Is that it reverses and goes back up again, and everybody will scream and kick their whole way as this market trades up to whatever resistance point, and there's about 42 million of them on the way back up, right? You just choose your poison, okay? So, and the second thing is, if this fails, if it goes up for a couple of days and it turns around and fails, that's information that we need to have as well too, because then it makes trading easy. Because if it fails, it's probably going to go down to a new low, in which case life is easy and straightforward, right? So the great thing is, and what I love about trading some days, is you get into this nice little simple binary pattern. There's very few things that are going to alter that binary pattern from here. So I expect the Canadian dollar, I wish, I love, and I think it would be just interesting and fascinating for it to do something other than nothing, as it has done for the past 2 or 3 or 4 or 5 weeks, whatever it is, right? For this thing to start moving upwards. Why would that be interesting? Well, it would confuse everybody, because just about the entire world is bearish of the US dollar right now. But also, it's also a maybe sign that people are thinking about taking profits on their oil and gold positions, which have been, I think, the basis for some of the Canadian dollar strength that we've seen over recent weeks as well too, because it is, after all, treated as being a commodity dollar currency. So if the commodity market rises, then you often see the Canadian dollar strengthening, and therefore dollar CAD will then go down. So let's see what happens, because we don't know. I know that I'm awful at predicting the future, but I'm not so bad at capturing it as it's starting to unfold. So what we're hoping here is that this gives us a bit more traction. For the record, I do have a long position in this, so I have, if you like, bought this breakout, and we'll see what happens. There's other reasons why I have bought this breakout I'd rather not get into, but let's just call it a momentum divergence would be a good starting point, right? So that's slightly off topic, because I really wanted to talk about macro markets. Two things I want to mention here. Number one, we had a absolutely ridiculous US CPI figure on Thursday, 5%. I believe it's the first time since 1992, which for most people is possibly beyond the point where they were born. And if you can remember 1992 like I can, you know it was some distance away. Black and white television, no internet. There was something called books, stuff like that, right? So some time ago, right? The key thing about this is the Fed has said all the time that this is transitory, right? All the time, over and over again. Don't worry, guys, it's only just transitory. So what did the bond market do? Because for me, the US Treasury bond market is the ultimate arbiter of what is going on. There's a reason for this. Okay, so sidebar here. To become a bond trader, you have to be good at maths. Okay, that's one of the key requisites for bond traders. Well, at least competent at maths, because I'm not brilliant at maths, and I was a bond trader. But you need to understand what is going on. When you understand bonds, you understand the world, right? Stock traders just need to be really good at reading psychology, because you just buy something that goes up. And equities sit at the very taily end bit of the company debt structure, the company capital structure, right? Bonds form the vast bulk of it, and so bonds are far more important to company cash flows than anything else, right? Anyway, sidebar, right? However, right, why is this important? Well, the bond market on Friday, the 10-year yield traded a low at one point during the day of 1.42. If you look at the bond market for the past 3 months, you will see it's one of the best trading markets in terms of performance out there. It has done nothing but rally. Do you remember 3 months ago in March, we were calling an end to the world for bonds? Interest rates were going up. They were never coming down. Inflation's picking up. End of the world, Armageddon, yada, 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 yada. What has happened since then? Well, what has happened since that point in time in March is bonds have rallied. In price terms, okay, in price terms on the 10-year note, not a huge amount, only about 3 or 4 points. So it's about 3%, so not brilliant. In yield terms, they have fallen from 177 to 142. That's an awful lot if you're a bond trader, right? That is not the stuff of a bear market. That is the stuff of a bull market, right? So why then did yields fall, and are they lower than where the market was when we had the inflation print last month at 4 point something that everybody freaked out about then? Okay, so this is my moment here, right? When we think about this, right, we go, oh, maybe the bond market's right. And if the bond market's right, now I get that this could be this intermediate top, and I get all of that, and maybe yields are going to drift higher from here, right? Get all of that stuff, okay? But why, on the very day when we had that CPI number come out, did the bond market rally? It rallied because it doesn't believe the CPI number is anything other than a very short-term measure. And what it's more worried about is what's going to happen next. Okay, so fast forward 4 or 5 months. Okay, for those of you who don't know, there's a seasonal pattern in the bond market. Okay, bonds tend to fall in price, rise in yield in the first 6 months of the year in the US. We could argue the toss about when that starts and when that ends, but call it roughly the first 6 months. Why do they do that? Well, they do that because most of the time the government raises all their prices in the first 6 months of the year. So, okay, what happens because they're doing it as they come to the end of their financial year in anticipation of the new financial year, right? So, what do we know about the second 6 months of the year? Well, the second 6 months of the year historically is when inflation falls. Okay, so the rate of inflation falls, not inflation itself falls. It could do, but the rate of inflation tends to drift away to the downside, right? It's called a tendency to go lower. Okay, so what does that mean? Well, during that time, if inflation is falling or not rising as fast, then very clearly the bond market will respond positively to that news. So again, you could argue over the first 6 months of the year, bond prices fall. Over the second 6 months of the year, bond prices have a habit of going up. Okay, so fast forward to today, where are we now? We're about the end of that 6 month block and bond prices have been rising for a couple of months. But over the first 6 months of the year, this has been a nightmare 6 months for bonds, right? The 10-year note started at a price of about 136, fell to a price of about 130, which by the way, in bond land is a massive move, right? And has then rallied back to about 133 again. So it's still well down on the start of the first 6 months. From here, what do we expect? Well, if our theory holds true, there is a seasonal bias for bond prices to rise for the next 6 months. So try and take those buy signals when they turn up. But this really gets down to the crux of this. So if the bond market is probably going to either remain where it is or do better over the course of the next 6 months, what is that saying about that rate of inflation? Two things, right? Number one, oh my God, that's a negative yield, right? A negative real yield of 3.5%. That is crazy, right? So in other words, you are losing 3.5% every time you buy a 10-year US Treasury bond at this inflation rate, right? So that means that your savings are going to be 3.5% less, worth less at the end of the year than they are at the beginning. Ouch, right? Way round it, think about inflation-linked securities, but let's move on from that, come back to that another day. Or the inflation rate is utterly and completely rubbish. And it's not rubbish because we know it's happening out there. We all know that. But what the bond market is telling you is it doesn't matter. It really is just transitory and it's going to go down. And more importantly than that, it's more than transitory. Inflation's still a big problem. Right? Roll back to in the past, when you go look at a bond chart, you will see when there have been previous inflation spikes of 2.5% or 3%, the bond market yields were 2.5% or 3%, not this crazy negative real yield we see today. So my thoughts on the macro side today are massive new high in CPI. The bond market not only completely ignored it, they smiled in the face of inflation and went, no, I think you're totally barking up the wrong tree. Now, is that going to unfold across the rest of the G7 or G8? Well, I think probably if inflation is topping out in the US, it's going to top out everywhere else. And if that is the case, then we have a bigger problem to think about. And if that is the case, then I suspect that could well be US dollar bullish from a fundamental point of view. Because if the economy starts to slow in the US, then I think the economy will start to struggle everywhere, in which case that's going to need more government spending, but it won't come from the US because the US, I think and I believe, has done enough so far. It's got to come from everybody else. They're going to unbelievably have to spend more, crazy good though it seems, right? So lots to think about there. Let's just deal with where we're at the moment. The bond market is literally laughing in the face of inflation. And I'll leave you with that, Paul.
Yeah, I took a moment to come back in. Cheers for that, Julian. Interesting stuff. Thank you very much for that. Always good to get the macro market overview and have a look at this market. And look at one thing we know, if it's going to be as sideways as it has been, that at some stage it's going to go in a direction and go pretty quickly there. Rightio. Next up is fundamentals with Alexis. Lexi, how are things looking fundamentally?
Hello, hello. Hi, hi. Hi. All right. I'm just going to share a screen and pretty interesting because I think I have been actually looking at or waiting for a bullish US dollar for quite a while, and hearing Julian said that made me pretty happy, or at least pretty excited, that maybe we could find some of our opportunities coming in. So let me just do a quick recap on what we are looking at, or what I have been waiting for is the what's been happening is the inflation rate has been pretty high, yes, but my eye has always been on the US jobless rate. So again, previously, what are the circumstances at which the Fed will consider raising its really low interest rates at the moment is, hypothetically, there is some kind of relation that's happening between its its uh, its job numbers. So this is the unemployment rate, and if we actually do a comparison between its unemployment rate and where its interest rates have started going up, is where, somewhere between the 4 to 5.5% area. So if you actually compare the correlation with that, when people are employed, where I think it's kind of makes sense, because if people have jobs, means that they have money, therefore they have a higher propensity to be able to spend a bit more. So interest rates are able to go up without too much negative impact on consumers, right? So with the jobless rates actually dipping to slightly below 6%. So previously, I was waiting for jobless rate to come back below. It's finally touched 5.8%. Hopefully, the next unemployment rate will come down a little bit more, and then I think the so-called noise about whether the Fed will increase its interest rates might come into fruition at that point. So they might not pop up the interest rates like now, but let's just see what the meeting this coming Thursday is about. I think they're having a monetary policy meeting coming right out on. Is that Thursday? Let me just do a quick check on the Forex Factory calendar to make sure we're getting the right dates. So we have the monetary policy news, the FOMC statements coming out on this Thursday. Let's just look at this. All right, back to the simple Forex Factory calendar. Now we have FOMC statements over here, and what I am interested in is the Friday, where the Japanese yen, or the Bank of Japan, will be coming. Um, I'm not sure if they are redefining their monetary policy statement, but I think a lot of eyes are on this as well, to see what will be their decision on what's happening in their economy. All right, I do like the numbers that are coming out of the U.S. still. Um, Other than the insanely high inflation rate, and the reason why I say insanely high is because I think if we compare it over maybe the past 25 years, you can see that it has, the last time it popped above 4% was in 2012, probably. No, before then, I think 2007, 2008, around here. It's one of the very few times it went into a big bubble, and then after that the financial crisis happened and everything just plunged back forward. So we are reaching numbers back then. Now if we are just talking about patterns, what is going to happen, is something major going to be happening here? Is this the stock market bubble we're talking about? Again, big question mark. But again, historically, for inflation to sustain over 4%, the last time it happened was what, 2005 to 2006 region. I would say this is nearing the 2008, 2007, 08 region, I guess, before things started changing. So I am a little bit curious as what's going to happen to shift inflation back down, or to increase interest rates back up. And with that, of course, again, my definitely medium term bullish, especially on the US dollar. So if we look at the price charts that we're looking at, what I am looking to see next week, the next few weeks actually, is whether or not something will change on the US dollar front. So if we take a look at the charts, let me remove the squiggles. These are my past squiggles where again I am waiting for, or I am very a bit more keen on the bullish USD and about using the technical setups to find a way to enter these. So dollar yen again has been ranging upward. I would say you can see the daily candles, have kind of is on an upward slope. So again, I'm a bit more hesitant on the dollar yen because of the monetary policy that comes up. And did I? Okay, sorry, my screen went blank for a bit. Um, okay, I'm hesitant on the dollar yen because of the monetary policy next week. So I'll be a bit more careful if I'm trading the dollar yen. But if I'm looking at the other dollar pairs, I would say there is an opportunity for some kind of breakout to happen. Really depending on what's going to happen, I guess, on the news front to give us that catalyst to push up. My interest has always been on the dollar sing. For those of you who have been following the dollar sing with me from the start, I think on the shorter time frames there will be opportunities to the long side, especially every time it touches about a 1.32, 1.31 high area. So overall, I definitely would be long on the dollar between the dollar and the sing. So it's really using the fundamental understanding of the MES, the MES, how you say, regulation of the Sing dollar to take the long opportunities and to be really careful when going short on the dollar. Again, a lot of the dollar pairs are looking at consolidation. So I guess the news is the catalyst that will give us that breakout. You can see the dollar all really ranging for the past, I think, month or so. Okay, so let's just see what next week brings us in terms of whether or not. I think when there are news to when the news comes out about increasing interest rates, I think this will give us the pop that we need. Also, another key indicator or key thing that we've noticed is, I think for the past, I would say a month and a half, if we look at the headlines, there are a lot of things on Bitcoin, right? Like maybe 8 out of 10 currency news, just currency news are on Bitcoin. Um, I think the last couple of days, especially the hype on Bitcoin has kind of flattened a little while, flattened a little bit as people are kind of waiting for things to happen, and there are more stuff coming up on things like bonds, things like inflation, um, so I do see more currency news coming back into the market, which gives us which is rather exciting. It would mean that our range bound trading might be ending soon. So I think exciting times are coming on the forex front where we should kind of see a direction pretty soon. So I guess next week we'll just keep an eye on the news and see what pops up to give us that catalyst to kind of push currencies one way. Last thing I want to touch on again is on the renminbi, the CNY. So there is a lot of pushback on the political front for the Chinese government, versus the US government. I think the sentiment on that end is still not that fantastic. Relations are still not improving, and if we look, and there are policies that I think um, the US are working on to kind of, and even the EU, they are working on to kind of curb their Chinese counterparts, or they are pretty much worried about how fast China is up and coming. So that brings us again to the CNY USD. You can see that the first lower high on the daily time frame has already happened. That pushback against the China economy has happened and is reflected in their currency as well. Um, so in that aspect, right, I am waiting to see whether the Aussies will follow suit. I think the first one to kind of react would be, let me see where. I think they haven't quite reacted yet, but we do have a very flat range bound trades for quite a number of pairs. I'm still a little bit bearish on the Aussie, and again, I think the Aussie looks a bit more breakout-ish, so I am waiting for that signal to happen to kind of follow suit on the depression of the Chinese currency. So I'm a bit more bearish on the Aussie, and in that aspect, if you look at just glance at the Aussie pairs on Friday, it's like everything on the Aussie is red except for Aussie Kiwi, but everything is red on the Aussie side. So I guess next Monday, Tuesday will be pretty interesting to see whether that horizontal levels are broken down and whether or not this worry about the political situation in China would kind of affect the currency strength of the Australian dollar as well. So currency pairs I'm looking forward to in the next 2 weeks would still be Aussie short and dollar longs. Hopefully, the technical setup will come and we will finish this 2 weeks of consolidation and finally get a direction somewhere. That's all I have, Paul. Thank you very much.
Alexis, thanks for that. It's nice to see some clarity coming into these markets as we move along. So we've had a look at the macro situation. We've had a look at the fundamental situation. Next up, we're going to have a look at the data with Ash. Ash, how are things in the UK today?
Beautiful, mate. Absolutely beautiful. It's it's been great now for a few weeks, and hopefully it will continue right through summer.
Mate, what's the data telling us? What's going to happen this week?
Oh, it's an interesting one again, in some respects, without really telling us anything extreme. So nothing has shifted sufficiently enough to say now's the time to pull the trigger. Now we know that the COT data doesn't really kind of give us a timing. It's not a timing tool per se. But I agree completely with Alexis on looking for that unemployment data to really give us a hint of when the dollar might start to rise. And I also agree with Julian about looking for the signals from the bond market, and the fact that you were both talking about the Canadian dollar. It wasn't going to be the one I was going to discuss, but because it really is a basket of 2 or 3 that we could touch on, the Canadian dollar was in there. So I think we can look at the Canadian dollar. And one of the reasons that the Canadian dollar might actually be the best is that at least it does have some confluence between the COT data and the seasonality. And what the kind of macro picture is suggesting is that we might well get some dollar strength. Now, the COT data is, as I say, not saying the timing's there yet. And I think we can probably wait for the COT data to give us that timing, because the dollar has been so beaten up. If we see some really extreme buying, even though it will happen on the Tuesday of the week and we won't get the data until Friday, it will give us probably enough of a clue that that particular trend will probably last quite some time. So the dollar hasn't started to boost yet, but the Canadian dollar does look weak. So if we're starting to kind of pick maybe a basket of currencies that might be the best against the dollar, if we wanted to buy the dollar and versus selling something else, the Canadian dollar does fall into that particular category. The commercials from last week didn't add to their longs, and they're just a little bit more negative on their longs, but they're also not really adding to their short positions either. So, back to the timing thing, it's not necessarily saying now's the time to pull the trigger, but on the whole, the longer term picture here does see the index on the COT report down at the zero line, and we can see what tends to happen. When you get that zero hit, it does usually indicate that there is either a downward move coming, or there is a downward move in existence. So we are anticipating that there will be a downward move in the Canadian dollar. And if we look at the net longs versus the net shorts, then the net shorts have started to spike to the upside. Okay, it didn't really kind of follow through this week, but on the whole, what we've really seen over the last 3 months is quite a lot of selling pressure with the Canadian dollar, as we see this red line start to push to the upside. And the reason that the Canadian dollar would maybe be the one that we should look at for now would be because of the seasonal pattern. So where the COT data might give us 2 or 3 others, the seasonal pattern in the Canadian dollar might well be the better one to look for downside. And the reason is that this is where we see June and this is where we see July. And it would suggest that sometime in around about the 2nd week of June, 3rd week of June, which is from this week to next week, we do see some downside, which would potentially take us right the way through to July. So if we focus on the seasonals, it would suggest maybe looking for some Canadian dollar weakness. If we focus on the COT data would support the Canadian dollar weakness. And if we were to look at the fundamentals, you might want to wait until, if you're looking for a real trigger, there's some CPI data from Canada on Wednesday. That might be a decent time to start thinking about the short. It's possible that it moves before that, and there might be an opportunity to get in and get safe before that CPI data. Or it might be that it goes sideways before that, meaning that we can wait for that CPI data to be released before we look for the potential shorts in the Canadian dollar. So just to summarize, we are looking at a potential dollar long. And with that, we can choose a basket of currencies to go against. And this week, it's suggesting that that particular currency would most likely be the Canadian dollar.
Cheers, mate. If they want extra information on COTS, seasonals, fundamentals, you've got your broadcast group, right, where all that stuff is covered. But for now, Canadian dollar is your one. Thank you for that very much, Ash. Much appreciated.
No problem.
Rightio, got a bit of a treat coming up. We'll miss Ainslie. She is away with the kids for the weekend. Must be the start of school holidays in Sydney, I imagine. But as she is away, we're going to have Julian come in and do gold. Julian, gold still looks pretty bullish for me. How about you?
Yes, Paul. So if we can, if Ash, could you be kind enough to give the screen back, and maybe we could have a quick look at a gold chart here. Hopefully, I can grab the screen. Just
yeah, you should be able to just take it, mate.
I'll see if I can grab the screen. Here we go. Awesome. Okay, let's move a couple of people out the way so I can see the screen as well too. Okay, guys. So right, I'm going to start as I always do with when I've asked to analyze a market. Let's start from the beginning. Okay, what I mean by the beginning is let's look at the monthly chart. Okay, we can all now just bear in mind, right? This is why these things are important. Okay, so we can see a bullish trend unfolding in the gold market. That doesn't take too much of a genius to figure that. Over the course of 2018 through till 2020, pretty much a strong bullish trend. Then we have had some kind of retracement. I think within this you can pick your wave A, wave B, wave C, wave down. So there's your ABC correction. Absolutely classic off a relatively strong third wave here, or messing around for wave 1, wave 2 down here. This is a third wave. And here we are, right. And so what's been happening? Let's drill into the micro and the monthly. Number one, we had a ring low formation in here. What does that mean? That means as soon as we got above that 1745, 1750 level, there was a ring low on the monthly form. Now, what does that do? Well, we know from our ring low analysis, guys, that from a asymmetry point of view, from a trading perspective, this is good news for us, especially when it's been going down for a while in a overall bull trend. This is an opportunity to add to longs or to put new longs on, because in all likelihood, the probability is it's going to go up and we have a predefined risk. As we suspected, right, from that ring low formation coming in, even and with a positive close as well too, the market then rallied and then spent the whole of April going up. Is that April or is that May? That's May going up as well too. So what have we done now? Well, we've seen a bit of a sell-off, right? So the market is what? Let's be let's be friendly about this and say it's consolidating, right? But in terms of the monthly pattern, short of us breaking down here, right, below this level here, or a bit more time unfolding so we have another ringed high formation and putting in a failure, this market is still bullish. What does that mean? It means we're trying to look and continue to look for buying opportunities. Okay, there's the monthly. Now we go look at the weekly pattern. Okay, so as we discussed earlier, for those of you that were hanging around earlier, we saw that gold had a couple of goes down at the 1680 area to 1700, right? It had a one big go down and then it ran the retest, and from that retest point, when it put in a spike bar, an extreme bar, or a hanging man, I think, if you're candlesticks, also it put in a ring low formation, right? The market did very, very well. And on the weekly chart, last week was an outside week, which can be confusing, and especially if it comes at the top of a trading range. So the question is this the top of a trading range? And that may or may well be the case. We don't know yet. We suspect otherwise looking at that monthly chart. So really what we're doing here is we're saying, right, okay, the monthly chart's still bullish. The weekly chart, is this really bearish? Can you find me a ringed high? Can you find me an excess move in here? And the short answer is no, I can't really. Yeah, okay, we've had one down week. You know, come on, let's get a grip here, right? One down week, and that down week was what? 1904 down to 18.91. So that's $13 or $14 for a down week. This week that has just gone past, we've had our second down week. But what do we know about this week? It is an inside week, and therefore do we care about it? Well, we only care about it if you know how to trade inside weeks. But yes, okay, we've given ourselves 2 weeks down. That's interesting. So on the weekly chart, 2 weeks down, given that we've had very few 2-week down opportunities in this entire move, is probably more a interesting place to be thinking about buying than it is to be worrying about, do I have the right short position on? Okay, so this is what you've got to be thinking about here. Outside week followed by an inside week, I would consider to be a consolidatory move. Right, let's drill down one more time, one more go. Okay, now we're looking at dailies. We can all see this consolidation pattern, well, maybe not totally clearly, but let's make it so we can see it. There was a consolidation pattern in here. I don't know if I can draw boxes on this just yet. My skill set is fairly good, but I'm not sure I can put some boxes in. But let's assume that there is a box around this area here, right? The breakout from that was pretty clear. We came back to almost retest it, but never made it. Another ring low formation, favorite pattern, okay? And then we went up and away we went, right? And then we came down and then we bounced again on some crazy short-term sell-off. I don't quite know I still can't remember the reason why for that. Let's just go, there was a big seller that day, right? The market then tried to recover, went down again last week on Thursday, bounced back, and then Friday just had a bit of a bad day. Okay, so now, what's going to happen this week? Well, if we think back to our weekly chart, still an inside week last week, 2 things. What we're looking for is extremes. So if we were to open lower, that might be an opportunity for us. If we were to open higher, I would be less inclined to do anything. If we opened in the middle of the range, well, then we need to look for opportunities. And where would our risk be? Well, we know that our risk is about 1801-ish, 1802 area, which is that major support. We shouldn't really trade through there, but that means that we're looking at a $76 stop, which is quite aggressive, right? So we need to try and maybe give this a couple more days to give us a better opportunity to try and get into this market from a trade basis. But right now, guys, overall, the trend still remains relatively positive despite Friday's sell-off. So think about this as a great opportunity for us to look for another opportunity to buy the market rather than necessarily get out of our longs or thinking about shorts. There is no reason right now for this market to be thinking about selling. So what key event we've got coming up this week? Well, we have the Fed coming up this week. What are they going to do? Well, they might start possibly thinking about at some point in time, maybe thinking about changing rates. Okay, and tapering the bond market. I do admit that if they did start to think about any of those thinkings, then that will probably have a quite interesting impact on a lot of financial markets. So they will be very careful about doing that, and they'll be pretty damn sure that when they do it, they're on the right side of it. So they'll no doubt be late to the party. Okay, so the economics will have supported it for a number of months, and the market will have anticipated it. So none of that's happening so far. So therefore, while yields continue to remain reasonably stable or lower, the gold market continues, in my mind, to represent good value. Where that would go wrong, where are our risks? Well, technically, we know where the risks are. We break this low here and we break this low here. We've got a bit of a problem. If we close below it, then I think we may start to reassess on the dailies. But does that mean we reassess on the weeklies? Well, the answer to that would be maybe, but really we need to see a close below this area here. But on the monthly, well, guys, unless we're below 1800 when all bets are off, quite frankly, this is still a bull market. We trade it as such, right? And I view a down month as an opportunity to get involved in the market rather than necessarily an opportunity to think about reversing positions. Similarly with the week, we've had 2 down closes. Think about that. Go back and look at the previous chart. When you've had 2 down closes in the bull market, what happens, right? This is where we do some of the analog work. This is what being a trader is all about. You go back and look at maybe this bull market and try and find 2 down closes. What happened? Okay, here I can see 1 here, 1 down close, 2 down close. That was the best buying opportunity we had, and look what happened next. Can we see another 2 down closes? Well, there's 1. No, that didn't qualify. And then I'm struggling to find myself 2 down closes. Here we go. There's 1 and there's 2, and look what happened next. So in the world of down closes on the weekly chart, this may well be seen as being a buying opportunity if we continue to trade that way. That's my view on gold, Paul. I hope that helps everybody. I think I'm a very poor substitute for Ainslie. He does this way better than I do.
I thought it was brilliant, mate. Thank you very much for that. We will watch it unfold this week and see if it gives us the opportunities that we're looking for to actually get into the market. Rightio, next up we have got crypto with Shukri. Shukri, are you with us?
Yes, I am. And let's look at the data first, okay? Because Bitcoin is going nowhere.
Bitcoin down a bit over the weekend, right? Like nowhere overall, but down a little bit over the market close for the other stuff.
Correct. It's going nowhere. So that is what is important. But I want to bring you to this. You see this scare here? Let's look at the crypto fear and greed index. This is so important. So now everyone is still in extreme fear. That's good. And then let's see the data again on what's really happening to the market. Look at this. This also happened before it hit an all-time high, right? Around here. Look at that. And then it was going this again, March 2020. That was the big one. And now we're here again. 3 weeks, 4 weeks.
Shukri, we've got no screen, buddy. We're not sharing anything. We can see you talking, mate.
Okay. Sorry. Let me get the screen here. Let me get the screen up here. Okay, this is the crypto fear and greed index. It's very important. We're now in extreme fear. So where is the relative, where are we in terms of the previous lows? This, which was March 2020, the height of the COVID crisis, this fear lasted 4 weeks before we went up. That's when people come into the market. This one was November 2018. This was like 3 weeks, 4 weeks. We are now in our 4th week. So this is good. So I see something very funny in BTC. I'm not really surprised that it's gotten this funny because it's really weird, but I'm going to show you something. Again, it's becoming the same old story. It's trying to do things. It's trying again to, during the weekends are for dumps. It dumps, rebounds, dumps, rebound. It went to support last weekend, got dumped Monday, Tuesday, rebound again, going nowhere. But what you want to really look at is Ethereum, and I'll show you why this all makes sense. Don't look at Bitcoin so much. What is happening on Ethereum? Don't look at this. This is Ethereum USD. Nothing is happening. Look at this. Ethereum Bitcoin, because once Ethereum Bitcoin goes up, you know that money is going into the smaller coins. And when we bring that up there, look there. So this is good because this means that the smaller coins should be coming up. So let's see what's happening outside there. As I've always said, people are talking about a DeFi summer. I think a DeFi summer is happening. Okay, look at this. Again, Karura from New Zealand raises 100 million ahead of the auction. This is like an IDO. This has not happened in a long, long time. $100 million. It has not formally started, okay, guys? It's only going to start on Tuesday. So this is a lot of money, and this is for Polkadot, by the way. And, this is a new ecosystem. It's not Ethereum. It is not Binance. It's on Polkadot. It's brand new. But they are going to have the pools. They are going to have the farms, everything. And as someone here confirmed, the cost to get in is what, 1.7 cents? Okay, that's good. I welcome 1.7 cents. Now, let's go ahead and look what's happening inside here. This is the number that is being contributed. So if you look at the top 3, this is the amount of Kusama that's going to be locked. This is almost 200 million, and it has not started yet. So, I see that Ethereum going up is good because I see money going somewhere because as in the wallet scores that we have, right? From Malaysia, if I want to buy Kusama, I have to go into Ethereum, right? And then I convert that into Moonriver and all this. So this is Polkadot. So I believe there is a DeFi summer coming soon, led by Polkadot and then Kusama, and then it will be followed by Solana and basically ADA. So don't look at all the charts. Look at this. This is money going in. No joke. Karura now has 130 million. The biggest so far in many, many years. Talking about maybe 3 years, since 2018, I think, or maybe 2017. So big big shift going on here, totally big. And you know, we'll see what Polkadot has for us. But you know, it's you know, people say you are late. Everyone says we're late. We're late for the Ethereum DeFi. We're late for the Binance DeFi. Doesn't matter. You're still early for the Polkadot DeFi, and 200 million being locked before it's even launching is totally phenomenal. Did not expect that.
So Shukri, what should we do? You're saying that we should be looking for
Yeah.
Karura? We should be looking to buy it?
Yeah, Karura and all that. But not only that, but only look also in the farming opportunities. The ones that you missed on Ethereum and Binance Smart Chain, which is like, you know, things like Compound and Pancake or whatever, it is going to be repeated in Polkadot. And it's not even started yet. And I showed you, and I think we're going to cover this very soon. You can even do it. You can even practice it now, you know, on the testnet. We never had that chance before. Okay, things happen, but now things are happening from the start. And I believe this is the start for Polkadot. This is the start for Solana, and this is the start for ADA soon, coming in the next 3-4 months. So yes, I do believe that there's going to be a DeFi summer, and a lot of it is going to be driven by Polkadot first.
Cheers, Shukri. Thanks for that. We will keep an eye. We'll talk to you again next Sunday. We'll have another look at this stuff.
Yeah.
Look, I'm going to have a quick look at the gold chart unless Julian wants to jump in and do gold as well today. I'll share the gold chart and have a bit of a chat. And after that, we'll be looking at the recordings from Lloyd and Geoff as we go through their sections as well, both away today in real terms. Let me just have a little look at, let me have a little look at bringing up an oil chart. Look, I'll keep the analysis pretty simple for this, and I'll keep in the technical stuff. Look, for mine, XTI, we will start with that. I'm on the weekly chart, and you can see here we've got this sort of reasonably substantially important level over the last few months, and 66.31. I think really people are calling it around $66, $67. And as long as we stay above that, I'll remain bull on oil. Target prices, I think, you know, we're looking for taking a bit of profit off the market around 74.15, 74.50, sorry. And really long term, we are looking to get up. And you know, people are saying a lot about oil being $100 by Christmas. Frankly, I could see oil being $100 just a little bit before that. And I think perhaps not at around number at that period of time. So look, it's the hardest part with oil for mine, when you have a look at this move up, is that we just haven't really seen, look, this important level. We did see a beautiful break and a retest, and that was our chance to get in and go up into this move. It's a very well-known level, I think the 66.30 sort of area. And now we're in it. I think we're just going to have to wait for a pullback to get back into it. And, you know, in a beautiful world, maybe we can get a pullback to sort of 67.86. But frankly, I have my doubts as to whether we'll see that. We may have to be a little bit more aggressive and look for something around the 68.50 mark for the pullback and a chance to have another crack at this. Nothing directly in the way at the moment, technically, until we get up to the sort of 74.50 level. So looks a good buy for mine. It's just a matter of waiting for the opportunity. Look, I turned up on Trading Buddies a few months ago and bought oil as a breakout just over the $60 mark. Must have been somewhere around here. I think I bought it maybe a bit further. Maybe actually I got it over here, didn't I? You know, I don't mind buying oil as a breakout, but really I'd like to see a bit more pullback, or at least some kind of consolidation before I took it at this level. You've got to say, having had, you know, sort of, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You know, 14 of the last 17 days have been green days, and you know, I'd like to see some level of pullback before I bought it. I think buying anything on market highs is dangerous, so I wouldn't do that myself on this particular one. Particularly as we're going back into space we haven't been in for a little while. You know, these levels aren't scary for oil. You know, these prices aren't amazing or anything since we haven't been in for a little while. And there we are, back around this level, sort of, you know, 2018. And, you know, we get up here, we're getting, you know, we haven't been back above that for quite a while. But, you know, we have been above all these levels, and there's plenty of space to come into these levels and have a look at. So while oil looks, you know, very bullish, and off, you know, we did a lot of stuff talking about buying and these levels down here, and getting out around the $48, $50 mark. If you've done that, hopefully you're back in and having a run up. 74.50 for next target. And after that, really for mine, what you're looking to do with oil really is to buy it, to scale out a little bit at the resistance areas, and to re-enter on the pullbacks and hang in around these levels. I don't see $100 itself as being a massive target. I would have thought that up around that sort of 106 level was a little bit more interesting. 107 level as a sort of midterm target on this, maybe next sort of 6 to 12 months. One thing about oil is, you know, very volatile, and we do have market control by organizations like OPEC, so you do need to watch the fundamentals pretty carefully. But technically, it's a buy for mine. Cheers, that is oil with me, and we're going to now, I think, have a look at Lloyd's video on indexes, currency indexes. Are you able to play that? Mai, when you share, did you click the button to allow video share the sound?
All right, good evening, everyone. So
Thanks.
let's go jump on straight to the technical analysis. Right, so I think there's a lot of big changes since last week. So let's have a look at last week's trades. Now, last week I actually wanted to short euro pound. Price went up and actually shot above my trend line. Yeah, so after that, I had a bearish engulfing bar, took a trade from here, but it was only 0.5%, as I was quite cautious about the market. Price reached my TP1. My stop loss has been shifted to entry, and we shall see whether there's any continuation from here. Yeah, overall, looking at the big picture, is a bit hazy from now on. Yeah. So if it goes, good for me. If it doesn't, I still have a small profit. The next trade which I wanted to take was dollar cat. Fortunately, it didn't actually trigger. The price didn't actually go up to the top of the range and giving me any reversal price action. It just wobbled about and shoot up. Interestingly, actually for this week, I'm quite bullish about DXY. Yeah. So it would be good to see if price actually retests the high of the range. From here, then possibly I might actually change to have a long trade instead of a short trade. So many things can change within the span of a week. So actually, this is what I'm looking up for now. Yeah. So from top on my list, I'm actually I'm pretty bearish about cat now. Yeah. So like I mentioned, a lot of things have changed since last week. So let's go on to the indices and see what is happening. Yeah. So DXY, $90 has held. You can see that price 4 weeks back we tested. So we got 2 doji after a low test bar, and now prices are some bulls are coming in. Yeah, so with regards to that, overall, of course, the trend is still, I would say, still a downtrend. Nothing much has changed, but since price is reluctant to go below $90, then of course I will begin to suspect that price will actually hit back to the last short-term horizontal level, which is about 91, 92. Yeah. So we shall see what happens, and then there's ample space for price to actually go up. So I'm pretty bullish about DXY this week. We shall see whether the momentum continues. Now, other than DXY, I have to be very clear. Other than DXY, there's no other currency that I'm bullish. Yeah, the rest is just bearish. Yeah, from DXY onwards, the rest is just bearish. It's just that which one is weak and which one is the weakest. Yeah. So among the ones that is bearish, I think Kiwi, we may have a chance for a range play. I mentioned this for quite a long time. So it's priced actually at the bottom of the range now. Yeah, so we may have a bounce off this at the bottom of the range and see whether there's any potential upside. Other than that, all the other pair, Aussie, same as always, still within this range, really massive for me. Now, pound, interestingly, it did actually hit up to the short-term horizontal level. Yeah, and instead we see bears coming in. Then naturally, I begin to suspect that I will need to revise my levels. From here, there'll be this. So since that price is unable to break here, then we have a very, very small space that price might actually retract back to about $40. Yes, it's only a $1 movement. Sorry, 1 point movement doesn't seem much. So I don't really have much hope for pound this week. Now yen, we can see a long tail coming, bearish bar, long tail, and then there seems to be some sort of continuation. So I'm still quite bearish about yen. But just that among this, let's have a look at Swiss. You can see that after it tested 110, price doesn't. It's pretty reluctant. Price seems reluctant to go up any further more. Look at all this ugly wick here. So the price will actually come back and test the 110. From then on, we shall see where it goes. But please note that this will actually be the first lower high. So long-term wise, this may be the start of a short bearish trend for Swiss. If that's the case, then I'll be very interested to see if it can actually get into any early short trades for Swiss. Now CAT, this is a clear sign that it doesn't want to go to $83. You can see that price goes up. Doji bar, slight bearish, really bearish bar comes in. So ample space for price to actually go back down to 80. Look, the fact is that for CXY, it has been on a bearish, bullish trend since quite May last year, April last year. So it's high time for it to have some retracement. We did have some sort of meaningful retracement back in September. After that, it's just bullish all the way. So it's good to have some retracement now. We can get in some short-term trades also. And the last is Euro. Euro was actually high on my list last week. But it seems that price is very reluctant to break through this horizontal level, and we have formed a double top back. So price may actually be heading down 120. So in lieu of that, for this week, Euro is my weakest, DXY is my strongest. So naturally, I'll be trying to short Euro dollar. You can see that 24-hour time frame, we already have one lower high, second lower high. And price has in fact break this horizontal level. So Monday may be interesting for me. I rarely trade on Mondays, but seems that this time around price has break, and you can see that there's a slight bullish bar. This may be the retest bar that I need. Just need a bearish bar, either a high test bar or a bearish engulfing bar to come in, and I'll be happy to go for short positions. The next one, which is Kiwi Cat. Now Kiwi Cat, I have to caution is that according to my Kiwi indices, you can see that price is actually in a range. So to play that, that means I'll actually naturally I'll go at 0.5%. It won't be really my usual trading. So price has, you can see that price has retested this level 3 times already. I'm just waiting for another test that I can put in a position here. This will be a better position for me to trade from. Otherwise, I'll simply just wait for a break and retest. Then I'll go for a long position. So these are the plays I'm looking out for the next week. Right, thank you and see you all. Goodbye.
Look, it's great for that, Lloyd. It's great to have the guys who can't come in and do their pieces provide us with some videos on their stuff. Thought it's really nice, a really nice touch. We've got Geoff up next, the technicians, 2 cents with as he looks at the markets from a technical point of view. Geoff, really a range trader looking for ranges and channels, and he'll tell us what's coming up in that area and what we can take advantage of for the rest of the week. Mai will play that one as well.
Hello everyone. Only 4 reversals on the weekly charts this week, and this is one of them, Aussie Swissy, and looking like it really does want to go a little bit shorter to me. I've got a little bit of an area down here. This is a confluence around about the, well, it's all the 6s really, the devil's number. If I have a look at this on the monthly chart, what I see is this particular scenario where we've broken through this major trend line and now coming back towards it. I think this level here is probably the level that it's going to seek, and that of course is the red line that I've got on my chart, and that is, or that coincides or creates a confluence with that monthly trend line, as I said. So the breakthrough, looking for a retest basically. Now to trade that, what I would be looking for, not necessarily on the weekly charts, but that is where we're getting that indicator from. It's also on the daily charts a reversal bar that you can see there, but the positioning or the entry level at this point would be very, very dangerous. So what I'll be looking for early in the week is a pullback. Daily pivot's going to drop down a little bit, so that may not be the gauge that we're looking for. But anything here, anything that looks like a retracement on that move on Friday really would interest me. So I'll be looking for that maybe on a 4-hour chart, something of that nature. But I just don't want to enter the market here. I think we do need the pullback, but it does look to me as though Aussie Swissy is in search of that confluence area, and that's what I'll be looking for early in the maybe middle of the week. We'll see how it pans out. Still on the Aussie, but this time Aussie US dollar. Again, a reversal bar. Interestingly, smashed through all the pivots. Well, came off the monthly pivot, smashed through the weekly, and down to the daily where it bounced. Now, this one's kind of much easier for me because we've come off the top of this range and we're seeking the bottom, in my humble opinion. Now, that candle there is the indicator that that may well be underway, and similar to what I've just described, I'll be looking for a little bit of a pullback. Now, the daily chart is very, very clear on the monthly pivot here. You can see that price just cannot close above it, and on Friday we got that very, very big move that broke this range, which obviously had already been broken, but it broke out of that small range that we've been in for the entire week, as were a lot of currencies. And we did see quite a few breakouts on Friday. This, of course, was one of them. Now, whether that's going to be a clear breakout or whether it's going to be a false breakout of that range will be determined, obviously, in the next couple of days. So what I'll be looking for is probably a retest of that area, and then I'll be looking for, well, a lower high off there, basically. And if we do get that lower high on the smaller time frames, or even on the daily time frame, if I've got a retest of this area, that is the weekly pivot, or was the weekly pivot and was for a couple of weeks, I think that that level there would be enough to suggest to me that an entry underneath the pullback bar might well be in order. Of course, on the smaller time frames is the first of those opportunities, and as I say, a lower high in here would get me interested based on what I've just described. So it's again short Aussie US dollar, and looking for a lower high to get us into that. Still on the Aussie, must have been an interesting day on Friday, or certainly a week for the Aussie, because it's going down against the US dollar in particular, but looks as though it's going, the pound is going down against the pound as well. And what I'll be looking for here is this breakout of this level that you can see that happened 2 weeks ago, and we had a retest of that. I'll be looking for that to be the retracement, if you like, on that move of those three candles, and price to go on and make new highs. Of course, very, very difficult to breach this level here, because that's exactly where it came off only the week before last. So interestingly, I think trying to find the right entry here, as always, is going to be a little bit of a task. But the daily chart is showing me quite clearly that on Thursday I didn't want to know anything about the monthly pivot, and then put in this big buying bar on Friday. I think a pullback to this trade line here would be my catalyst for entering the market long, and I'll certainly be looking to do that off that trade line. So it'll be this probably on. I'll be looking at this very closely on Tuesday after Monday's candle, and if it is a decisive bar that comes back and tests that trade line, then I will be looking to enter long. That's pretty much it for the reversal bars on the weekly chart. There was one other that I'm looking at, and it is Euro Yen. And if you've been watching me on this show in particular, you will know that I'm looking very, very closely at, have been looking to get into this short, due in fact to the 7 months prior, which have all been bullish bars, unprecedented as far as I'm concerned. And this bar here is an indicator that we are going to be negative for the month, although there's a long way to go. Just looking for a lower high in here. We have had lower low, lower high, lower low, looking for another lower high to get into the market short, and the target area is down there around about the 130 mark. So that is Euro Yen, and looking for a short after a little bit of a pullback and a lower high. And for this week, that is my 2 cents worth.
Cheers, cheers, Geoff. Thank you very much for that, and to the team as well coming in and sharing their knowledge today. Mai, do we have a prize draw today? I'm going to take that as wheel is ready. Wheel is ready. Okay, what are we going to give away? We will give away one person's access to Adam's upcoming course on low risk, high profit automated execution. I've been following that system this week, up 4.5% for the week. Mai, let's see what we got. Let's see if you can win it. Crystal wins. Cool. Helen wins. Helen, if you can confirm that you are in the room and are still with us, then we will get that prize sorted out for you. You just need to pop in the box telling us that you're here, Helen. If you have left, you will be gutted. You really will. And here, surprise. Welcome along, Helen. Congratulations on your win. To all of you, look, guys, it's going to be an interesting trading week for mine. It is a week where I think the picture will get clearer as we work through the week. Be patient. Wait for good trades. It'll all work out for you. Stay calm. Hi, Helen. Cheers, everyone. Have a good weekend. Rest of Sunday evening for you wherever you are in the world, and trade with caution this week. Stay calm. Make good decisions. Sure works out if you do that. Cheers, everyone. See you later. Thank you.